Welcome to the first quarter outlook. I have with me Graeme Bibby, our CIO, and my name's Matthew Leong, Portfolio Manager. So Graeme, in our 2025 outlook, we did a quarter ago, we expected a pretty volatile environment. That has played out maybe a little bit more than we expected and maybe a little bit earlier than we expected. Would you mind giving us an update on the macro?
Well, coming into the year, we expected uncertainty from policy, a new administration most likely, which we got, and we weren't sure which policies were going to be enacted first, and we were seeing some green shoots of potential early economic rebound. Things change rapidly, and I think with the negative policies for the economy that have come in, we've had a lot of those front-loaded. So very early action on cutting migration and particularly on tariffs. So we've had a degree of layered in announcements and now a big bang announcement on what's called Liberation Day. So we've seen quite a lot more tariff levels than we expected and most market participants expected. So there's a recalibration to, this is a new regime, will these be rolled back or not?
Yeah, we've seen a big sharp drawdown in equity markets as well, albeit from a pretty high starting point. In terms of our outlook or views on equity, we think that there may be further downside. It really sort of depends on how far and how long those tariffs go in place, but we think there are broader implications for business and consumer sentiment as well, in terms of the uncertainty that that's bringing through. At this stage, we think that earnings revisions could go down further. We haven't really seen that happen yet, and as a result, we have a pretty cautious view on equities. Graeme, what do we see in fixed income?
Well, in fixed income, we've seen some pricing in of a potential recession. I think a lot of market participants are saying there's likely to be a recession. We still think that's a wide variety of possibilities there. So it's quite possible we might not get the full extent of tariffs. We might get some more certainty on policy. But what we're seeing is a higher loading towards uncertainty of policy, even on these tariffs. So when we move from this, what's been a globalist to protectionist sort of era, we have more uncertainty in trade. So that means for fixed income, that government bonds have come down in yield, pricing in the short term potential recession, but then corporate bonds have risen in credit spread, which prices in a slowing and potential high default cycle. It still remains to be seen whether we're going to be in an inflationary, deflationary or stagflationary environment. So there's a range of outcomes that could still play out there. We believe probably weighing towards the more inflationary side. So Matt, on the asset allocation and views from here.
Yeah, so because of, the uncertainty as to where the tariffs end up, how long they stay for, what levels will they be put in place, we do have a wide range of outcomes, and as a result, we are a bit more conservative in our outlook. We have, for our model portfolios, trimmed allocations to growth assets via equities. So we have cut both our allocations on Australian equity and global equity. We just see further downside risk in terms of earnings revisions as well as earnings multiples. We are seeing earnings multiples back on 10-year historical averages, so not at cheap levels yet. So we are cognizant of the fact that there is potential for further downside if there is a recession coming. That is still not quite our base case, but we are moving there, and we just wanted to be conservatively positioned ahead of that. However, if we do see emergency policy settings or some sort of support from governments and central banks across the world, that may give us some support for equity markets. Or if we're seeing a capitulation from equity market participants in terms of a sell-off or a deleveraging in markets, we are ready to move back into growth assets on that front. Any final words on asset allocation or outlook, Graeme?
Well, I think there's the short term, and we're monitoring things daily. So, the policy moves can change. We think the Federal Reserve's likely to hold off and not necessarily do emergency cuts or do anything too sudden. So markets are pricing well ahead of that, and it remains to be seen if those further cuts do get priced in. So we think the jury's still out on a lot of the situation here, and so we need to be flexible in our mindset and ready to act.
Well, thank you for watching. That was our outlook for the first quarter. And all the best with your portfolios.
Thank you.